Hey guys, welcome back. In today's video, we are talking about how AMC is poised to take off, the collaterals being created, short unwinding, and many more in this video. First, we take a look at this. You can see AMC is poised to ride the box office rebound per CNBC. So finally, we have the media accepting the fact that AMC will be benefiting from the box office. This is something that the retail investors have known from the longest of time. We've seen how AMC has improved. We've seen how AMC has recovered, and we know how AMC is going to go above and beyond. But one thing that we've always saw that the media was saying was how AMC is obviously not going to do well. And again, it's obviously being debunked by the countless earnings that we have seen from AMC. Now, one thing that we have to know is the fact they've said this now. So AMC obviously had the earnings recently, and you can see after earnings, AMC price is still quite been stagnating, it's consolidating within this range. And we're finally coming out with this piece of news. If you take a look at IMAX, at Cinema, you can see how after their earnings were released, you can see how they obviously saw a massive surge of capital flowing in, but yet the same can't be said for AMC. And that's because they wanted to make it look like AMC was the only company to have failed. But they know deep down, and again, it's something that we've said that they can't hide, is that it's obviously not the case. And now we're finally seeing how they're finally admitting the fact that AMC will ride the box office rebound. And bear in mind, AMC has already done exceptionally well. And we can already see how this is reflecting. You can see a picture is worth 1,000 words, but institutional ownership is now the same as during the 2021 squeeze. Something that we have realized was that the institutional ownership for AMC has pretty much been increasing every single month, every single quarter. And so once the media has been saying for you to sell your shares, for you to stay away from AMC, the institutions are doing the complete opposite. They are actually accumulating as many shares as they possibly could, because remember, the shares that they are buying right now are very likely to be synthetic shares, as long with anyone else who are buying the shares, because we've seen from the OBV that no one is selling their shares. We've seen that the shares that are being held from the very start of 2021 are still being held, even until now, that no one's actually selling those shares. So we know that obviously it's synthetic shares that are being bought up, but regardless, it's showing the fact that if institutions are willing to be accumulating and buying AMC shares, can you really believe what the media is saying of staying away, of selling your shares, when they're doing the complete opposite? And this is a big reflection of understanding how we know they see the potential, they see the opportunity there is for AMC. And it's why, like I said, that this news was something that should have been said ages ago, but it's only being said now. And you can also see what Joshua Sky said here: AMC buying, holding, but never selling shares. $500, i.e. 50, all the way going to 20,000, i.e. 2,000, not selling. It's been an additional 4 years of selling unlimited shares to the public when there has been zero available shares. If you thought 2021 was big, that was child play compared to what's coming, never leaving ever. So as always, none of this is ever financial advice, so do take out a grain of salt, make sure you do your own due diligence and research. And along with this post as well, again, everyone has different targets. One thing that I want to contribute here is obviously, like I said, they have been selling fake shares, they've been selling synthetic shares, and they've been doing this for 4 years now. So that's why everyone has a very different target. That's why targets are still always high, because of the fact that maybe if this has started at the moment back in 2021 and the squeeze happened, we might have seen 5,000, we might have seen $1,000. But it's the very fact that they have created so many shares that we've seen how even one company is able to create billions of shares, let alone the multiple companies that are shorting AMC. Like I said, it won't be surprising to be 20,000. It won't be surprising to see 50,000, and obviously even higher than that. Like I said, this isn't a target for you to obviously go off of. You should have your own target in mind. But what I want to say is obviously understanding the fact how this situation has gotten way bigger because of the amount of synthetic shares that they have created throughout these years. Now, let's talk about the collaterals being created. Something that we've always talked about was how collaterals are something that's being used by institutions, which allow them to obviously create synthetics, because this is the way for them to gain access to cash, and it's how they have the cash to create synthetics. We've seen it with the reverse repo. We've seen it, like we talked about, with the NVIDIA longs. we talked about the cryptos. There was news about crypto, how it's not able to be used as collateral, but we can see Binance launches stablecoin BFUSD, the yield-bearing stablecoin, and can also be used as collateral for trading and borrowing. Now, the thing I want to quickly mention here is obviously every time we see the word collateral, we obviously need to put more thought into it. Now, the case that they're obviously using here is talking about collateral when you're trading the perps for crypto. So any Bitcoin futures, any Ethereum futures, or any other futures that is obviously talked about. But it's understanding the fact how they're trying to make it so that crypto can be used as collateral, but we're still seeing these collaterals being created. This isn't my way of saying that crypto is bad, they shouldn't invest in crypto, but it's understanding how there is still, like I talked about, always new methods of leverage that are being created that are accessible for these institutions. And so this could be something that will be used as collateral, not just for crypto trading, but again, with what we talked about, the tokens of AMC, but at the end of the day, also creating synthetics for AMC as well. Now, furthermore, let's take a look at this. Holy fucking shit, Mara shorts are going to unwind all part of the hedge positions by buying Mara common stocks. So we can see here, in connection with any repurchase of the existing 2026 convertible shares, Mara expects the holders of the existing 2026 convertible notes who agree to having the notes repurchased and who have hedged the equity price with respect to such notes will unwind all or part of the hedge positions by buying Mara's common stock and or entering into or unwinding various derivative transactions with respect to Mara's common stock. So the talk of here is obviously talking about the hedges. Now, when you're saying by buying Mara's common stock, you're obviously talking about unwinding the short positions. And this is what we are seeing right now. And so, again, the reason why I'm mentioning this is talking about how, like I said, many of the short sellers are always mutual. When you're seeing short sellers of Mara stocks, it's very likely that they're short sellers of AMC and GME stocks. But even if they're not, remember the thing that we've seen in the past is understanding how short sellers have a massive domino effect to other short sellers, even if they aren't, shorting the same stock. And the reason why I say this is because if they take one massive hit in one of their positions, they may have to unwind other positions along with that. And those positions could be affecting the short sellers of AMC and GME. And so you can see how all of these capital are kind of toying together, and that's what we are saying. And so by seeing the uncovering of Mara shares, we could be taking a look at the collaterals of other short sellers really be taking a hit, and how their positions could also be going upside down as well. So furthermore, let's take a look at this. Trump's tariff policies are cause of concern for Citadel founder Griffin. So Billion Hedge manager Ken Griffin had voiced apprehensions about Donald Trump's approach to tariffs, labeling them as a slippery slope with potentially harmful long-term consequences for US businesses. And this is something. So if you haven't noticed already, we are seeing many things in today's video that are having an effect on short sellers. Whether it's the fact we're seeing media finally admitting that AMC is riding a box office rebound, whether it's the fact we're seeing institutions buying, so therefore having buy pressure, having an effect on short, or whether we're taking a look at new collaterals needed to be created, shorts having to uncover their positions, we are seeing how short sellers are being extremely limited. Now, another thing is obviously with the tariffs. So the very fact is Ken Griffin talking here should obviously already give you an understanding. Now, we obviously understand that Trump's going to be in office, it's going to be under his administration. We also know that Trump does not have a friendly relationship with Ken Griffin, something that he has voiced multiple times. And Ken Griffin have also done the same. So we can definitely see how Ken Griffin in the next 4 years is definitely going to be having a very rough time. It does look like with the administration, or at least under the administration of Donald Trump, is that there is going to be things that will heavily impact Ken Griffin's positions in the negative way. And that's why he's always voiced his concerns. That's why he's saying all of these things. And again, this is obviously very, very good things for us, because by him taking massive hits, by him actually being affected by these, impactful decisions being made, it's going to be weakening into his capitals. And just like we talked about with other market makers as well, like we talked about recently with DJT and how those short sellers have been burnt, we're going to be seeing more and more short sellers being burnt in the next 4 years. That's definitely a good thing. Like I said, it's is a ticking clock. It's only a matter of time. Once their capital runs out, that's when they'll have to cover. And again, another thing is also you can see it's not hidden, it's right on the open for anyone who's accounting 101. As we see, there's a hidden risk lurking for AI stocks in 2025. Just another massive effect into the overall positions that these short sellers have into their collaterals. And like I said, when we do see a massive recession in the market, a massive crash, we're going to be seeing the short sellers taking a massive hit as well. And you guys, thanks for watching. I'll catch you guys next time.